All right, all right, all right. What's up, everybody? Happy Wednesday morning. Welcome to our Wednesday morning edition of the Daily Market Commentary. We have now, this is, I think this is 4 straight weeks that we've been doing our live session. So I want to welcome you all that are here watching us live. For those of you that are brand new to the Daily Market Commentary, every day we look at the same levels. We try to keep it consistent, and the reason being is that because if we know that if we stay consistent on the levels that we show you, then you're going to see how time and how trades develop over over a period of time and of days and sometimes even of weeks. So that's what we're going to look at. Matter of fact, one of the levels that hit yesterday was a level that we had identified weeks ago that finally gave us a good entry. So we will cover some of that stuff today. If you have any questions, as always, you can type it into the chat box. So do me a favor, Tushar, Luis, good morning, good morning. Everybody, say hello in the chat box for me, just so I know that our chat box is up and running. And then one quick thing on the chat box: if you ask a question, understand that there's about a 30-second delay from when I say something to when you hear it. So if I don't get to your question right away, it's typically because there's a slight delay from that period. So it's just one of the YouTube live skills. So let's go ahead and I'm going to go ahead and shrink my face, because as much as I think I'm quite attractive, you may not think that I am, but I hope my wife does. But I'm going to shrink my face down so you can see the screen. And let's go ahead and talk about some things this morning in the charts. And please be active in the chat box. The more active you are in the chat box, the easier it is for us. All right, so let's start with the S&P. Now, yesterday we talked about the fact that our big picture trend was up, right? We had a big picture upward trend, and the big picture upward trend had told us that we did have a decent area here with a potential to short. The potential for that short, though, had to be a confirmation entry, and so we knew that it didn't really have very long life in it. And so it traded fairly quickly out of that zone, which is why we put a trade update out yesterday that it did a 2-to-1, and it was the 6 candle rule. So it was time to close that thing out. Now, why did we do that? Well, because we got into the trade, and then we saw that there was really no price action moving. And it said, you know what, we should probably just close this thing out. There's no reason to stay in that position once we saw that we didn't get a strong reaction. And that was what my overall feeling, right? So price then rallied up out of there. Now, I know a number of traders last night who said that they took the long on the breakout of the S&P afterwards. So did any of you guys catch the long on the breakout on the S&P after that, following the rules? So Jason, the shirt, come on, this is Schrodinger's cat. He's wanted both dead and alive, although you probably can't see the bottom of it from my camera. But anyway, that shows how much of a nerd I am. So today, when I look at this thing, I said this a couple of weeks ago. For those of you that have been around, is that I believe that we were going to get to the point of trading to this gap fill area, and we're almost there. We're almost to the gap fill area. Now, this gap fill area, 33.33 by 33.43, it's actually kind of a small level relative to some of the other areas, and we're currently basing in front of the level. You can see this. We're basing here in front of the level. So a good question that a lot of people, oh, Sonia, come on, you can be good enough for breakouts. We all can be. So if I've got this much risk, right, meaning my entry is down here and my stop is somewhere up here, and I duplicate that line, that shows me that currently this is offering about a 1-to-1 reward to risk trade. So it may not make sense to take the short on the gap fill, although I wouldn't be surprised to see us get that gap fill and then come back a bit. We do have this area that was formed in the overnight. If we get a little bit of a pullback here in the next little bit. So right in here, right at 3,300, I think, is a decent area for a potential pullback and a long trading opportunity. So that, I think, is a really good spot, 33.02. Now, if you get into this, where does your stop have to be? Well, you know what? We're not tugging on Superman's cape quite yet, John. And I'm glad you brought that up, because it's not quite the all-time high. So if you want to take the short, if you do still want to try this short, which I don't love it once again because of this area up here, um, I'm going to switch it. I'll mark it as a confirmation entry. For those of you guys that are unfamiliar with our line nomenclature, for those of you unfamiliar with the line nomenclature, we have our rules are very simple. If it's a green line, it was a 60-minute chart. If it's a pink line, it was a 15-minute chart. And if it's a blue line, it's a breakout. Okay? Green line, 60-minute. Blue line, pink line, 15-minute. Blue line, breakout. And then if it's a dashed line, it's a confirmation entry. If it's a solid line, it's a limit entry. So in case you guys were unaware of kind of how we do that. So when I look at this area up here, my rule is don't tug on Superman's cape, don't spit into the wind, and don't short the all-time high. I'm okay with it because it's not the all-time high. It's a little bit below that. However, the basing in front here makes it a lot weaker. So that's one of the things that I would be aware of. Hey, Mike, glad you could join us. All right. So I still like the pullback into this region here for a potential long. And on the 4-hour, that's a nice little pullback and an area to get long. And it's also kind of a whole round number zone as well. So any more questions on the S&P? Does that level make sense to everybody? I mean, even if we shrink down to the 15-minute, you actually have a little bit of a level on top of there that might be worth considering as well. So, if you're a little bit more aggressive, you can even get in at 33.05, give yourself a little bit of a buffer zone on top of our hourly level. The hourly level is pretty clean though overall. All right. So that's kind of my thoughts on the S&P. Yesterday we had the NASDAQ levels that we had been talking about, and we set in a brand new. Good point, Jeremy. So where would my stop go? So in a perfect world, your stop should go underneath the pivot. Agreed. However, a lot of times people are going to look at that and go, wow, that's way too far away. So what can I do? So another way to look for where your stop can go is to look at this leg in. And this is where I can theoretically, and let me draw this line more precisely. One of the complaints I hear from people sometimes is that I don't draw my lines quite precisely. Well, that's because I'm trying to get through 12 markets in 10 minutes. So there's a little bit more precise. Top of the highest body, bottom of the lowest wick, inside of that zone. Now, where does my stop go? The tightest my stop can go, theoretically, your best stop is going to be underneath this pivot. It's going to give you plenty of room. If you want to go tighter, you can go to a 15-minute chart. And on a 15-minute chart, I could put my stop right here at 32.95. That would be really the tightest I would want my stop to be. The absolute tightest would be underneath this wick right there. Matter of fact, I'll even put a red line there so that everybody has it. Okay? So that's the tightest your stop could be in my mind. And a lot of people would say, well, Chuck, why don't you just draw your zone the whole way? Well, because that's not the zone. The zone is here, but we've got to give ourselves enough room to be wrong. And I know a lot of people who I just use a percentage of ATR underneath the level. Well, the market doesn't give a crap about the ATR percentage that you use. What we really care about is where are the orders, filled or unfilled. And when I shrink down to a 15-minute chart, if I take the wick, the lowest wick before the leg in, that's typically going to give me enough wiggle room. Okay? What's up, Justin? Good to see you, man. All right, so there's our hourly levels in the S&P. Let's move over to the NASDAQ. So in our NASDAQ zone, we're at the all-time high. Amit, yes, I will. The next time I get to one, I will talk about exactly how we take a confirmation entry and the structure behind there, because that's a very great point. So looking here on the NASDAQ chart on the 1 hour, by the way, we had a long breakout trade in the NASDAQ the other day, which ran for a very nice move. The very nice move off of there. How many of you are still in the breakout trade that we did on Sunday night? Is anybody still in our Sunday night breakout trade? For those of you guys that were in the room on Sunday evening? Because that's so far, that and the Nat Gas have been the trade of the week so far. And when you can get into these trades and stay in them for a few days. I talk to lots of traders they consider themselves, I'm a day trader only. I'm a day trader only. Well, if you're a day trader only, you miss out on the big runs. Um, this thing has moved very nicely from our breakout trade. Mr. John, what's up, brother? Took it, but out now. Yeah, it's just if you can hold them, that's where you get the bigger runs. Now, the hard part is when I get pullbacks in here, it scares me out of the position, and so I'm okay if you do. But just look at that, especially when we're at an all-time high scenario, right? We talked about this. How high can this thing go? As high as it wants. And the funny part is that the fundamentals of the market are telling us that there's no reason we should keep going up, and I don't care what the fundamentals of the market tell me. Oh, good, Nathaniel. I love to hear that. What I care about is that the market gives us indications, and the indications that it's telling us is that we've got higher swing highs and higher swing lows. And so with higher swing highs and higher swing lows, I'm going to continue to be long until the market tells me to stop it. Now, I will say that right here where I got a lower swing low, it told me, okay, stop being long for a little bit, and you can maybe take a few shorts. And then it told us to be long again, and that's what it's telling us. So that means that I'm going to have times where I've got long trades set up where I get stopped out and it's a small loss, and I'm totally okay with that. I'm a little bit, looking at this, I can see that I have on my 15-minute chart that we've already bounced off this level once, and now we're coming into it a second time. Now, this level was created right about 1 a.m. My time, right around 1 a.m. my time, which is similar to where our S&P level was created. Our S&P level was created actually an hour prior to that. So that shows me that it's already worked once for a little move away. Second time around, I'm not going to lean on this. I'm not taking this level a second time. Now, is it still a level? You bet your assets it is. I'm just not willing to put my money on the line for it. And so I don't really like any of these close levels of demand inside of the NASDAQ until I come all the way down to here. That's the next true level of demand that I actually like in the NASDAQ on a pullback. By the way, doesn't mean that I'm resound to not getting long. If we get a quality breakout above here, then I've got another breakout to the upside. And you're going to continue to see that we essentially have a standing breakout trade when we're at an all-time high, provided I get the basing. If I do not get quality basing, I do not have a quality breakout opportunity. But provided that I get quality basing, I've got another opportunity for an upside breakout. All right, Russell. So looking at our Russell. Now, in our Russell level, we did have a breakout level. Price actually gave us a little bit of this double top area in here. And yesterday we thought, well, if you are so convinced and so inclined, if you think this double top is going to be enough to bring us down. And I will say, in my mind, yesterday the Russell was the weakest of our markets. And then the Russell turned around and smacked me in the mouth overthinking that because he felt disrespected and just rocketed straight up. So in this case, looking at what happened, now we rallied up, but what is our trend direction? Our trend direction is up. So this area here, which is a supply zone, was there any reason to get into this supply zone trade? What do you think? Was there any reason for me to get into this supply zone trade? There's actually two reasons to keep me out of this supply zone trade. What do you think the two reasons are that keep me out of this area overnight that hit entry? And this is almost like a little quiz for those of you that listen to what I preach on a regular basis. Because there's two reasons that say you shouldn't be in this thing, and that's really what we want to focus on is the probability. Very good. So basing in front of the level, which for those of you that are remembers, basing before the level is the kiss of death, and it's a counter trend move, which means if I chose to get in, the only way I could get in would be with a confirmation entry, and we did not get a confirmation entry before price pierced the top. So now what I need to do is look a bit lower for an opportunity to re-enter, and that's basically the same level as what we have in the S&P around that same time of day. Okay, very good, Kevin. You guys, some of you guys, Olsey, nice job. Simonetti, Steve Hall, Abi, good job. You guys know that those are, and you'll hear me say those things over and over and over again. Basing is the kiss of death before a level on a reversal. trading on against the big picture trend, it's okay to trade against the big picture trend, provided that I get a confirmation entry that sets myself up. So with that, let me explain what a confirmation entry is real quick for those of you that are unfamiliar with the term. So when I look at a confirmation entry and how we set up a confirmation entry, when I'm looking, let's just say theoretically, although this one is not, I hate when Thinkorswim does that. Although this one is not a confirmation entry, let's just say theoretically this one was. Right now, I'm still okay with this being a limit entry, but let's say it was a confirmation entry. So the way our confirmation entry rules work is that if price trades halfway into the area, this is the activation level on our trades. So right here, this is the activation level, meaning that the trade is not even activated until we get to this area. So this line is our activation level. Well, if we get below our distal line before coming out of the proximal line, this would be our cancel area. So we would cancel the trade if price gets below here. If we do hit the activation level, you then use a stop limit entry in order to get into the trade after it's touched the activation level. So how do I set that trade up? Well, in TradeStation, you can use an activation rule followed by a stop limit entry. In Thinkorswim, you use what's called the order rules box, which if you go to the trade tab, doesn't matter what I'm trading, you just click right on this little box right here on the very far right, and that is your order rules box that allows you to set those up, when it trades at or below a certain level. So you can trigger a trade at a certain point. In interactive brokers, it's actually called a contingent order, and so there's numbers of different ways to do it. So, all right. So I'm going to remove all this stuff. I still think this is a pretty good level. Now, unless we get basing in front of it. So Otto says basing before the level, meaning basing before the level, Otto, means that, or kiss of death meaning that a level is not worth it if I have basing in front of it. And the basing that we're talking about specifically is if I have basing 2 to 1 inside of 2 to 1 of that zone, right? 2 to 1 is that it is not going to work if I get basing within 2 to 1 of that zone, and it's just going to blow through and it's going to fail miserably. And remember, my job as a professional risk manager is to stay out of bad trades. It's not always to go out and find really good ones. It's to stay out of bad ones. And if I can stay out of bad trades, that's what's going to keep my account going longer. All right. So before I move off, and I don't normally cover the YM in the daily market commentary, but I'm not going to jump into that one today. Before I move off on that, does anybody have any questions on our equity markets before I move over to commodities? Any questions on equity markets? Oh, Justin, you're right. It is. That is especially if she pinches your cheeks. That's the problem. So Reinvestor says, do you feel the same about basing in the zone? I think that basing in the zone is bad if you base with more than 6 candles. So we have a very strict rule, Reinvestor, and it's called the 6 candle rule. So if I get into a level and it does not start moving my way within 6 candles, I'm out of the position. Right? Doesn't make any sense for me to stay in it. So, all right, Olsey, you want me to go over the YM? I will go over the YM because I love you. All right, so looking at the YM on our 4-hour chart, we are very sideways in the YM. And I think that the reason I don't go over the YM as much is because typically I get better opportunities in the other 3 markets than I do in the Dow. And essentially the same thing is happening today. I don't have as good of a clean setup in the YM as I do in my other markets. So in the YM, Olsey, for you, we make the time. As long as I normally go 30 minutes on this. I may go a little bit longer if everybody's all right with that. Justin. So I've got 1 touch, 2 touch. What do I need in order to give me a quality breakout here? I've got once, twice, 3 times a breakout. That's what I'm looking for, right? But I still need a couple of key things here before that breakout would be valid. I can't take it until we have, I'm trying, Justin. My rules on breakout trades. For those of you that are unfamiliar, and I've done a number of different videos on this, but our rules on breakout trades is minimum of 3 touches. 3 touches, very good. Basing before the level. Remember, basing is the kiss of death in a reversal trade. It is very important to have in a breakout trade. And room to roam. Very good, Amit. Room to roam. So if I have those 3 things, that's what tells me that I've got a decent breakout potential, right? So let's talk about it. Do I have 3 touches? Well, so far I have touch number 1, touch number 2. I don't have a third touch, but that third touch can occur on the basing before the level. What about basing before the level? When I say I want basing before the level, to me that basing has to be right about here. So currently that basing is too far away, because right now, if we were just to break through right now, my basing would be this area down here, and that's too far away from current price. So I would need the basing to be a little bit tighter. Now I'm looking at this on a 4-hour on the breakout. I'm okay if that basing occurs on the 1 hour, since I'm looking at it in here, but that basing has to occur somewhere in this zone. Now, the third rule being room to roam. So, room to roam would be how far can it go up before my opposing area of supply? Well, I do have an opposing supply area in here right there. So to me, this would be my first target, would be somewhere up in here. The question then would be, do I have enough reward to risk to justify this move? Now, that's 300 points in the Dow. I mean, it doesn't look like a lot from here, but that's 300 Dow points, and that's enough, right? So when I look at this as a 300 Dow point move, I got to figure, where's my stop go? Well, how do I judge my stop? My stop goes on the pivot prior to the breakout. So if I place my stop on the pivot prior to the breakout, the closest pivot to the breakout, that's where I place my stop on that hourly on the hourly time frame. So that's the long I'm looking for on this. Now, by the way, there's people that are still saying that we can't go up in the Dow or in any of these markets, because fundamentally it's wrong. Just freaking buy it if it goes up again, please. It's just worth the risk and the exposure. All right. So I'm gonna post the trade for those of you that are. I'm gonna share this grid. In our trade updates, and I'll throw it in the chat box. So one of the things that we do, just so you guys are aware, I just posted it in the chat box. For those of you guys that are Traders Army members, we actually share our charts every day with the trade members. So I put it in the chat box for today for all of you guys that want to copy it. We share the charts rather than just share the grids and the numbers. So you guys all have that now in the chat box. And then Traders Army members, it'll be up in the trade feed after class is done today. All right, so there's our equities markets. Let's talk next about commodities. So yesterday in commodities was an interesting day, specifically in crude oil. Now, in crude oil, we had 2 trades. We had 3 trades, actually, in crude yesterday. We had this little 15-minute zone that I looked at in the morning. And this little 15-minute zone, when I looked at it yesterday morning, I mean, we had just moved away from it. When I was looking at crude yesterday, it was right here, and we had looked at this and said, you may get a little retest back into here and give you an opportunity. And the market gave us an entry, and then 1, 2, 3 candles later, on the 4th candle later, it didn't even get the 6 candle rule, we took a small stop out. And then the son of a gun just absolutely exploded to the upside. Huge move up yesterday in crude oil. And matter of fact, it went up so far that it came into levels that we had identified weeks prior, okay? Now, we then got a little bit of basing right here at our breakout level. So there were, I talked to a couple people that took the long on this breakout, and you got to move up. But the cleaner one was the short right here off of our 15-minute level, coming back down. Now, if you notice, this 15-minute level, the opposing zone of that 15-minute level was right here, was the origin of this move. And so now it came back to the demand, which was the origin of this move. And this is one of the things that I think is key, is that we're able to take the long on the breakout, the short on the retest, and then if you're really, wanted to go with the trend, you can go long again as it comes back up. Now, notice the first time we came into this level, we traded all the way to the top and all the way back down. Now, this wasn't the first time we'd come into this level. We'd come into this level prior. I don't think that on my charts at the moment. There we go. We had come close to this level prior. We didn't come in it. We had come close to this level prior and did not get in. So that's our rule on if we don't get into a level, we've got to convert it to a confirmation entry. That's why it was a confirmation. So that was that trade kind of moving away. So hopefully some of you guys caught that yesterday. Now, after that, we then broke higher, and we've continued to break higher. So what I'm going to do is I'm going to put this line back. And the reason I'm putting this line back is because I think that oftentimes old supply will act as new demand. Old resistance acts as new support. And so I know many of you have heard, don't cut through candles. I will tell you, feel free to cut through candles because levels that existed back here still matter over here. Now, why do they still matter? The reason that they still matter is because there's enough traders looking back there to the left that they will place their orders about what's going to happen on the right, okay? And so I'm going to leave this area in here. However, I think it makes sense to say if you do that, your stop has to be somewhere below here, this 41.84. It's a little bit further back inside of that zone. Okay? Now, you might want to give it a little bit of buffer. You might get in a bit early right in here, but I think that I'm just going to leave this kind of goldenrod color in here and allow for a reversal back into this zone with a move up. Ingrid, I'm not sure that the indexes are following crude. I've been saying for weeks that I've anticipated crude continuing its bigger rally, and my thought is that by the end of summer we would be at 45 and possibly even as high as 50. And I remember a guy with the initials JK telling people way back when crude oil was down here that he had full confidence that we were going to close this gap, and a lot of people saying, oh, that's pretty far away. Well, that's a longer term swing trade, right? Let's see, Chuck, what do you think of the price action on the move up around the 42 area? Looks like there's a lot of levels on levels, all that retest each other in the 15 minutes. Let me go back down to it. Yes, I agree with that. Those are a lot of levels on levels that are a little bit, we'll call the word, I use the term incestuous, where they're kind of retesting each other's zones. I totally agree with that. The only reason that I kept the level in here that we have, Liz, is because this level is a flip area. It's a former area of resistance that sometimes acts as an area of demand, right? It's exactly right, Justin. It was J.K. Rowling. She knows her stuff. She knew that it was going to go up, so she said, Wingardium Leviosa. Wow, I'm such a nerd. All right, so I think that's a decent area in crude oil. Somewhere back here, if we get a bit of a pullback. Now, that's still $1 away from where we are today, and we're up $1.29, so it may not make it there today. We've actually got a pretty good level here that just hit quite recently, on this rally up. We could even reverse here at this 42.78, 42.70 region sometime today. All right. Next, let's talk about gold. So gold, here's our breakout from the other day. Hopefully you are still sitting in that breakout trade because we got another breakout in gold right up above this basing here, and it's continuing its march higher. Now, when I look at gold, remember this, when I look at the 20-year weekly chart, we are well above our all-time high. Let me ask you all this. Is gold overextended? Oh, that's a good point, Liz. It could drop down to crude oil could drop down. Is gold overextended? What do y'all think about that? Steve. Gold is overextended. I don't care, right? Olsey, I don't care that gold is overextended. It can stay overextended as long as it wants. But you know what? If it gives me good quality breakout opportunities, then I'll take them, meaning I need to have the basing. Dennis, I agree. It's completely stretched. However, it was stretched here, and it was stretched here, and it was stretched here. So I think it's way stretched, but I don't care. I'm still willing to be a buyer on a quality demand area pullback or on a quality breakout opportunity. Now, when I look at quality demand areas from where we are right now, this is the one that I like the best. Whoa, what in the world? That is not the line I wanted. This is the one that I like the best. For those of you that are familiar, the pattern here is a wick over wick area. And so I use those wick over wick areas. You'll hear me use that term a lot. And really, we have two wick over wick areas, the lower one being here, the secondary one being just above. The other thing I like about that is the time of day that level was formed and created. The other thing I like about that is it is a former area of resistance. So there's a lot of things to like about this 2015, 2007 area. The downside is that it could pull back. By the time it pulls back into here, it could have a little bit of momentum on that drop, and it could scare some investors out. I'm okay with that. I think that's a pretty good area to go long. All right. Next, nat gas. So in natural gas, we had a gap and go trade from Sunday. And I don't know if anybody still is anyone still in our Sunday gap and go trade? John Sr., you better be still in this gap. You better have taken this gap and go trade, John Sr. Now, I will say that yesterday, after we had gapped up, we had talked about we may get a little bit of a gap fill area here, or excuse me, a little bit of a pullback here to go back to the origin of this move. And so with this move, we had price come below our breakout line. Let me ask everybody out there, is this considered a false breakout? Okay. Is this considered a false breakout? Dennis, GDX has tripled off the March lows. Yeah, GDX is moving. Bob Duns. I'm not sure about Bob. So I know that Bob does a lot of stuff, but I'm not sure what else. Yeah, Tushar, we'll look at silver. Your sewn. Right. So this is very good. This is not a false breakout. This is absolutely not a false breakout. And this is not a false breakout because it is not a breakout. You know, a lot of people would say, "Oh, look at this. This is why breakout trades don't work." Well, that's not a breakout trade because it didn't follow our rules. It didn't give 3 touches. We didn't get basing below the level, right? We had room to roam, but we didn't get 3 touches and we didn't get basing in front of the level. And so it's always the gap and go guy. Got it. Okay. So that's neither here nor there. Now, then this becomes a confirmation entry because our big picture trend is up. And so since our big picture trend is up, there's no reason for this entry. So we had levels on the charts that told us there's no reason to get in. Now, on that gap and go from Sunday night, most people I know that were in it did get stopped out on this big pullback right here because you'd taken your stop and moved it up underneath this area here. If you want to get back in and re-engage on this long, I think your best area is very similar. It's this wick over wick area right here. I love these wick over wick above a pivot low because I think those are very strong areas. And this was a trade set up on Sunday night. For those of you guys that do not trade on Sunday nights, I ask why. Now, if you've got, if Sunday night is family night or things like that, then I completely understand. However, I will say, I've found that setting up my trades Sunday nights have opened me up to a significantly better chance to find really great trades because I'm getting in before the markets have opened up and I get a chance to set up and look for some of those bigger moves. So Amit says your zone structures are quite unique. Can you elaborate what you look in the zone? Number of candles, fight, etc. So I don't have a ton of time to dive too deep into what I look for, but essentially, it's different than the concept of just pure supply and demand levels because I'm looking at fair price value areas, which then look to the left and find areas of turning points left of where the zone was created. So that adds an additional level of probability to those trades. So, and I don't have time to dive too deep into that at the moment, but I could maybe do a session on that at one point because I would like to try to get through everything today, at least before I told you guys 30 minutes. We may wind up going a little bit longer. In the HG, which is our copper position, now we'd had some pretty good copper trades last week, and then got a little bit of a stop out on some of these moves here because I thought that there was a chance with our 4 hour showing that weakness that we would pull back to this 2.75 area. We stalled out on that move down, and then on the next leg back up, I got a couple of small stop outs right in here on a 15-minute chart, and then on the hourly, we got a little move away on the hourly, but not as clean. So now on this one, I've got a demand area down here that I think is a pretty good zone. I don't have a whole lot else other than that to look at in copper that I'm excited about at the moment. I'm just going to hold off on adding any new levels to that piece. That's just not a great setup. Okay. Next, somebody asked me to take a look at silver, so let's look at silver. Now, I will say this, and I've said this a number of times, relative to gold, silver is still underpriced, right? Relative to gold, silver is still underpriced, and we've been talking about this level, this $28, $29 weekly supply level as our target in silver for a while. I know there are a number of people that are still long some of our trades from back here, and now we weren't using the silver futures, we were using SLV, that are still in that position because it's so undervalued compared to gold. Now, does it mean that I want to take a short at this level? Probably not. What it does mean, though, is that if we make it up to this level, we may see a decent retracement to get me long at a better opportunity. So what I'm looking at for right now is this area right here as price comes back into that zone. Okay? All right. Let's see. Soy. So I had a level in soy. Our soybean level that I thought was going to be pretty clean. Now this was a really nice touch and go off of this zone that we had up here, causing us to convert the next touch to a confirmation entry. We then had this area of demand that I anticipated a decent movement. We got a little bit of basing here in front of that demand area, but it was still far enough away for me to be willing to be okay with this trade. And so the market just cut right through that level like a knife through butter. So if you were in that soy long, yes, Joe, trading options in SLV. We actually had a trade, Joe. When was this? Liz, do you remember when we set that trade up? I mean, I want to say it was back when SLV was trading at like $11. I think it was when SLV was $11 that we set that thing up. So some people are still in that thing. So, and I'm not, and it's a good runner. So, all right. Anyway, knife through tofu. Well, Ranger Doug, that's only if the tofu is the firm kind, because that's the better way the knife goes through it. Other than that, it's just going to be mush. But yeah, cut it right through like a knife through tofu. Which I'm so stealing that. You're my hero, Doug. Looking at that area, though, I'm going to put that area back on the chart, and I'm going to change the color. And the reason I'm going to do that is because that makes for a really good flip. Okay, you got the BFF when price was at 14. Yeah, I know that Corey had set that up a long time ago at a different number. So looking at soy now on my 4-hour chart, looking at my big picture, we are in a downward trend technically. I've got a lower swing low, I've got a lower swing high. Now, a lot of people would say, oh, it's a sideways trend because they're looking at this whole thing. When in reality, when identifying trend direction, I only care about the most two prior swings. Swing low, swing high, swing low, swing high. My last two prior swing highs, my last two prior swing lows were all lower than one another. So my trend direction officially shifted once I got lower than this candle's low. I set in a new swing low. So that's what now that makes shorts a lot more sense. So since shorts make a lot more sense, now I've got this area here, which I think is a pretty decent flip. Looking at corn, Ranger Doug, I know you're not trading corn as much as you used to. I only started trading corn because of you. This was a picture-perfect breakout trade in corn. Got us a really nice move away. For those of you that are still in this corn short, I think now it's okay to take your stop and move it probably to right up here at above 322 because we were able to hold that in the Globex session. I think it's still good. Well, they say waiting is the hardest part. I learned that from Mr. Petty. And on the 4-hour, our trend is clearly down. We have a demand level down below us, but that's got to be a confirmation demand. And so if I get another opportunity to go short, then I will. I'll need some basing at this 320 region. Whew. All right. That's a lot on commodities. What I'm going to do is I'm going to share you all the commodity grid so that you guys have it. Now, if you are Thinkorswim members, if you just click on this link that I just posted into the chat window, then you can open it up right in Thinkorswim. If you are if you're not a Thinkorswim member, then Thinkorswim user, then what you can do is you can just click on that link and it'll at least take you to a screenshot of where all the lines are, so you can kind of see where we draw our lines. So hopefully that's something that you guys can use. All right. Let's go take a look at bonds and currencies before we wrap this day up. And I went longer than I like to go, but I promise next week I'll be done quicker. In our ZN, we're seeing the bond markets continue to rally. The bond markets, as they are continuing to rally, the prices of these bonds, there's definitely a much higher demand for these, and we broke out of what was a very long running kind of sideways price action we had been in. And so now we're looking for quality areas of demand as an opportunity to re-engage. And I've not gotten much, I guess the word would be, I've not gotten much help with getting back into these longs. It's just not retested any of our levels. So I don't want to go and force levels when they're not there. So I'm glad you like it, DJ. So I'm going to leave these two demand areas that I've had here down in place. Inside of the Aussie, so in our Aussie position, we had looked yesterday and said that, maybe we were starting to see a little bit of weakness, and then the U.S. dollar just tanked again. And so skadoosh, the markets rallied straight back up. So with the markets rallying straight back up, I now have to take a look and see where's our areas of demand in order to get long on some sort of a retest. We'll go into the 15-minute chart as I zoom in a little bit to the 15-minute, and we just had a conversation about this yesterday. This wick over wick on a 15-minute is an acceptable level. That's a very acceptable zone on a 15-minute chart. The only downside of this zone is that we tried to come into it and we were unable to do so already once. Now, if I look at that on the hourly, that'll be a decent little pullback into an area where there's a whole bunch of wicks. So not the cleanest of levels, which is why I'm glad that it's a very small zone. So keep an eye on this one for today. Next, the euro. So in our euro position, yesterday we came up to our 15-minute level, and we got our touch for a decent little entry. We got our touch for a decent little entry on our 15-minute zone, and then it just kind of did, as Yukon Cornelius would say, nothing. 1, 2, 3, 4, 5, 6 candles later, we had moved like 7 ticks, right? That's nothing, right? We're not getting much. It's just not moving our direction. So what do we do when that happens? We take our stop, we move it to break even, telling us that we can go to bed knowing that we're going to be all right. And then the stop moves up, it's going to stop you out at break even. That's okay. Now, interestingly enough, that old area of supply acted as an area of demand, and price rallied away. And so, you know, I like that. I like trades like that because it doesn't really cost me anything to get into it when it's not when it's not a great level. And now I've got a potential for a retest at one of these better, higher probability zones. And let's move this back to the purple because it's a 15-minute chart. Remember our rules on why and when we draw our levels. Next, the Canadian dollar. So in our Canadian dollar, this is one yesterday that cut right through it like a knife through maple syrup. How's that? Is that better, Doug? Does that fit? It blew right through the level, small stop out, and I'm okay with that, right? I'll take those small stop outs when I get them. The second time we came up into a zone, it was a confirmation short, and so there was really no reason for entry. So now, obviously, we're continuing to rally higher. Now, we did come to, and this was a bit frustrating, we did come to a breakout level. Our breakout trade, we got the breakout. But is this a breakout that we can get long on? What do y'all think? Can I get long on this breakout? Not really. It didn't fit my rules. See, I can't cherry pick and say, oh, well, we can get long on this one because it's working. No, I can't cherry pick the rules. If I don't get breakout, if I don't get basing before the level, I can't take it. I just can't do it. And so this needs to be now a retest at the breakout area. So now when I come down to the 1 hour, I've got to look for a retest at the breakout region. And so what I'm going to do is I'm going to say, well, just below that breakout region, you have this long wick on this one green candlestick, right at a market close, which is not a bad time of day. Okay? So that's an area there that's worth considering if we get a retest. Great British Pound. So in our Great British Pound level yesterday, we got a really nice move off of our confirmation short. It came into our confirmation long. Now, in coming into our confirmation long, we did not get below our stop point. Remember, our stop has to be below the wick, and so we came in. We got a 1, 2, 3, 4, 5, 6 candles later. Then we started to make the move. So we got a nice little move away out of that long position. So the short was really nice. Got to remove it, though. The long was really nice. Got to remove it, though. And then we came into another short. 1, 2, 3, 4, 5, 6 candles later, price had gone basically nowhere. But what do we say this again? Old supply, what did it do? Acts as new demand. Now, why does that work? The reason that level works, now, by the way, I wasn't up at 3:30 in the morning, so I did not get this long. But I'm showing it to you because it's a good illustrative purpose. The reason that works is because there were enough traders that looked over here to the left and saw that area existed that they put their orders in the queue afterwards. See, you'll hear me say this over and over, time and time again. Where the supply and demand strategy falls short is in considering orders that have been added to the queue after price moves away. And when the only thing you consider is unfilled orders at a level, what you miss out on are orders that get added to the queue after price moves away, right? So what do I mean by that? Well, because we know for certain that in this area there were no more willing sellers and there had to be willing buyers. And everybody's aware of that if they understand how supply and demand works, right? There's no more willing sellers. There has to still be willing buyers or else price doesn't go up. Well, if all I do is consider the buyers that are left over, then that tells me that there's still some buyers left over. But what about all the buyers that canceled their order once price moved away? What about all the buyers who said, oh, I wish I would have bought it there. When it gets back, I'm going to place my trade there. And the reason I'm going to place my trade there is because that's an area that was resistance in the past, right? And that's the way we look at fair price value. All right, Japanese yen. As the police officer in the show South Park says, nothing to see here, people. Move along. We're still between our areas of supply and demand. There's just not a whole lot in here worth adding, and different things that I would want to jump to. So hopefully this makes sense to everybody on why we're not adding anything to our list here. So real quick, For those of you that are new to how we look at levels, if you go to Traders Army, go to free trading videos. I know this is most people's favorite word, free. If you go to free trading videos, you have a video called Drawing Lines on the Charts. If you don't know how we pick our zones, this is how we identify the zones as far as, what color lines we use and all of that piece. I think it's worth taking a look at. If you are, all you've got to do is be a free member at Traders Army in order to see where those areas are. So hopefully that'll help you to kind of see some of those. And then there's a lot of other pieces on there. For those of you that are on Thinkorswim, we got some Thinkorswim platform immersions, some basic options, different pieces on here for those of you that have never seen it. So take a look in there. Let's see, JY potential basing. Let's take a look. You talking this area right here, Liz? Yeah, technically with this wick right here, we have 1 touch, 2 touch. So you are correct. If we get basing inside that region, we may be able to get a move away from that zone. I think that's actually a really great point. John says too many lines. What does too many lines mean, John? If you could just elaborate what you mean by too many lines, hopefully I can comment on that. But yeah, Liz, I can see a breakout above that 94.80 if we get the quality basing, because you've got some room to roam, I think is the other piece. But when I say basing, to me, it's down here is not basing enough. I need that basing to happen right there, right in front of that level. So, all right. And then, John, if you've got any elaboration on too many lines, if I don't have time to answer it now, feel free to shoot me an email, which is support. And I'll type it in the chat box at tradersarmy.com. Oh, accumulated lines from the past. So when are you talking about my chart seemed to have too many lines, like this gold trade, for example? Yeah, you're correct, Liz. The reason that I keep all these lines on the charts, though, is because those lines, the levels are still going to be valid in my mind if there's enough traders that are willing to take them. Now, the downside of having all these lines on the charts is that by the time we get down to these areas of demand, my trend will have changed direction. So while it still may look like a limit entry, by the time we get there, it may not be a limit entry. It may switch to a confirmation entry. So that's the thing that I would say, is that those levels still have validation, the validity. And the example that I use for that is the crude oil trade from yesterday, right? Our crude oil short from yesterday was from a line that we drew probably 2 weeks ago, but that level still had some validity to it. Let me go grab the bonds and currencies lines for you. So I'll share that grid with you. So I'm going to leave these lines on here because they're still valid. I can always zoom in and zoom out if need be, and don't need to pay full attention to each of those levels. But that's why I leave them all on there, John. So because I think there's still some validity. But for example, like on this euro trade, that's a lot of lines, but on where current price is, I'm still fairly far away. Now, when you look at it like this, it looks like there's a ton of them on there. So, all right. Well, that's all I have for today. I hope everybody had a good session with us. As always, I genuinely appreciate you all joining me today. If you have any questions, shoot us an email, support@tradersarmy.com. Traders Army members, remember tonight at 7 p.m., don't forget we have our open forum session. And our open forum session tonight is going to be on trader taxation. So we are having 7 p.m. Central. So we're having a trader taxation specialist join us at 7 p.m. Central. So feel free to have your questions ready to go. He knows that it's an open forum session, and so you're going to ask any questions that you want. Here's the calendar. This is our open forum session, and then tomorrow morning's our active trading room. So, all right, everybody, hope you have a phenomenal day, and I will talk to you soon. See ya. High five.